let's understand what is the buyback scheme first. The buyback scheme means that if you were to take a buyback scheme for 5 years, they have already predetermined the value of your car at the end of 5 years. Monthly EMI is much lower in the buyback scheme as compared to a regular loan. There are also a whole bunch of other variables that you need to take into account into the buyback plan. Let's evaluate 3 different options, financing options when it comes down to owning a BMW. Most people who go after 5 years end up upgrading their car.
Before we start today's episode, I just wanted to quickly share that we are now a part of Zerota's media network.
If you ever explored or thought of buying a BMW, Mercedes or an Audi, there's a high likelihood you would have come across this term called the buyback scheme. Today we're going to be discussing whether you should take the buyback scheme or not, what is the buyback scheme, how does it compare to other financing options, and when does it make sense and when does it not make sense. This video is because of a colleague of mine. He was in the market for a BMW X1, so we are going to take his live example. We have all the quotations from BMW showroom in Gurgaon for the buyback scheme, which is what we've computed on. And so you will find this helpful. If you are in the market like him for a luxury car, you will hopefully find value in this video on which financing scheme should you go for and whether you should go for a buyback scheme or not. So let's dive into it. Here's the screen, which is a BMW Financial Services quotation that he shared gracefully with us. Let's understand what is the buyback scheme first, right? So this is for a BMW X1. The ex-showroom price of this car is 49,90,000 after discounts and all of the registration insurance. The on-road price is 54,01,610 rupees, right? Now, as a part of what does the buyback scheme mean? The buyback scheme means that if you were to take a buyback scheme for 5 years, and at the end of the 5 years, BMW today has told you that they are going to, they have already predetermined the value of your car at the end of 5 years. So what they are saying is that if you were to sell this car at the end of 5 years to us, we are going to pay you 25,94,800 rupees. This is essentially what the buyback scheme is. That they have given you a predetermined value of your car at the end of 5 years, which is 25,94,800 in this case. What does this do for you, the customer? Because they have already given your car a minimum value at the end of 5 years, they are going to take that into account when they're giving you the loan, as a result of which your monthly EMI is much lower in the buyback scheme as compared to a regular loan. If you were to go through a public sector bank and get a normal loan, then your EMI will be a lot higher than what your EMI is in the case of a buyback plan. So that's the key difference, right? If you were to do a quick Google search also, what it says is a BMW buyback plan, also known as the BMW 360 plan, is a financing option where BMW guarantees a certain future value for your car at the end of your loan term. So in our case, at the end of the loan term, the future value that BMW is guaranteeing us is 25,94,800 for this X1. So that's what the buyback plan is. The other conditions are that no major accident should take place. The small wear and tear is okay. Servicing needs to happen only at BMW. If it runs more than 10,000 kilometers in a year, then 25 to 30 per kilometer is the charge. It will be cut from the residual value. So whatever that 25 lakh odd figure was at the end of the 5th year, it will be cut from that. And so that's how this works. Okay, so now that we understand what the buyback plan is, let's evaluate 3 different options, financing options when it comes down to owning a BMW. The first one is down payment. We look at if you were to do a down payment, how much does the car effectively cost you? Second is a regular loan. So a regular loan through a public sector bank, assuming you have a great CIBIL score, you'll get a competitive rate of interest, and we'll go through that, exactly what rate of interest we're going to take. And so we'll look at that calculation, how much is your effective car cost of ownership over 5 years going to be. And the final one is the BMW buyback plan. We'll compare these 3 scenarios, and hopefully by the end of the video, you'll have an answer on which scenario actually makes sense for you. So let's jump in. The first, let's look at the car details. The car is a BMW X1. On-road price we've already discussed, 54,01,610. We are looking at a year of ownership of 5, so a 5-year loan period. Life of car is 15 years. I've also tried to arrive at a resale value as things stand currently. BMW is a pretty decent car. The resale is not as bad as an Audi. So life of car 15 years, depreciation after 5 years, broadly I've taken 45%. Regular viewers of the channel will know how we arrived at 45%. And therefore the resale value of the car right now would be about 29,70,886 rupees, right? So that's the car details. Now let's look at scenario number 1. Our scenario number 1, and here are the 3 scenarios, right? 100% down payment, regular bank loan, BMW 360. Let me first hide all of these because it will just get very confusing. So let's hide these rows. Let's go on one by one. Before we jump into this, I also want to tell you what present value is. So what is present value? Present value is the current value of a future sum of money or stream of cash flows. It basically builds on the same concept as time value of money. It is the inverse of compounding in a way. The way to think about this is through this example. If today you have 100 rupees, at the end of 5 years, you have 140 rupees, right? Now the discount rate is 7%. Discount rate is nothing but how much can you grow this money by every year. So because by growing it at 7% every year, in year 0 you have 100, in year 5 you have 140. The present value of this 140 rupees 100. That's all it is. And how did you do it? By using the discount rate of 7%. Why am I telling you this? Because in today's calculations, all 3 scenarios, we look at the present value of all of the inflows and outflows that we have along the 5-year journey of the car. So let's jump into our 3 scenarios now. We have a discounting rate of 10%, and this is a discounting factor that I have made, that at the end of year 1 is 0.95, 0.87. The further down, the more you discount it. Scenario 1, 100% down payment, right? This is year 0, 2024. Down payment of, you pay the entire sum of money, which is 54,01,610, no EMIs. And now let's look at what is the resale value in the market at the end of the 5th year. So in 2029, when you are to go out to sell the car in the market, as per our estimates, you can easily get, if not easily, at least current market state, you can get about 29,70,886. The present value of this 29,70,886 in today's term, if we discount it by 10%, is about 19,32,528. So this is the amount of money that you will get back. And if you were to bring it here, then it basically, the cost of ownership for 5 years is nothing but 54 lakhs minus the 19,32,000 that you will get, which comes to about 34,69,882 rupees. So that's the first part, right? That if you were to buy this car 100% down payment, your cost of ownership for 5 years will be 34,69,882. So now let's move on to our second scenario, which is a regular bank loan. In the regular bank loan, I am taking the same down payment as the BMW plan, which is 7,51,610, which means that your down payment is 7,51,610. Your loan amount is 46,50,000. The rate of interest I've taken 9%, which is what my friend is getting from a public sector bank. Tenure of loan is 5. This is a 9% floating rate of interest. And your monthly EMI comes to 96,526 for this car. You can look at any online calculator, but if you look at here, 46,50,000, 9%, loan tenure 5 year, your monthly EMI is 96,526. That's what you've taken here. If you go back to our calculation here, so 96,526 into 12 is what the annual EMI becomes, which is 11,58,312. So this is how much you're paying over the 5-year duration of the car every year, year on year. That's what you're paying as an EMI. I have taken it at a yearly level. There will be some small adjustments if you were to do this at a monthly level, but for the sake of simplicity, I'm taking it at an yearly level. Sale value in the market of the car is the same, 29,70,886 that we had taken in the previous scenario. And therefore, we finally arrive at what is the big figure here, that in the year 5, instead of 29,70,000 in your scenario 1, in scenario 2 in the regular bank loan, you get 18,12,574. The discounted cash flows of all of these, if you look at that, is computed here. So this 18,12,574 after 5 years becomes, the present value of that is about 11,80,000. Right now, you look at all of this, you add all of this to see how much your total outlay is in present value terms. It comes to about 34,19,087 rupees. Right? So this is better than your 100% down payment scenario. That is also partly to do because your discounting factor here is 10%. If you were to change this, things will change. So you're getting, your discounting factor is 10%, which means you're growing the money at 10%, and your rate of interest is 9%, and that is why taking a loan here is making more sense than 100% down payment. So that's as simple as that, right? Now let's move on to the third scenario, which is the BMW 360 plan. What we see here is slightly counterintuitive. So what we see here is that in the year 1, you have paid 7,51,610 rupees, which is what you had to pay, same as scenario 2. If we look at what is the amount of EMI that we have to pay, So the first month EMI is 54,013, but after that it's 65,347 all along the 5-year period, 60th, and then the 60th month mark you have to pay this lump sum amount, which is to buy the car back, right? At the end of the 5th year you have to give this money, otherwise you have to give the car. So the way I've done this is that in the first year, therefore, because that first EMI is slightly lower, you will see a slightly lower amount here in the first year, which is 7,72,830. And we have the next 3 years of consistent payments. And the last year, what ends up happening is that you haven't paid the 12th installment in the 5th year. Instead of that 12th installment, you paid the buyback amount, which is 25,94,800. So what is happening in 2029 is you're paying 11 months ka EMI, then you're paying the buyback amount to get the car. Otherwise, you won't get the car. You can also refinance this, by the way. It will make it complicated, but I don't want to get into that. And then finally, I am assuming for the sake of consistency that you're going to sell the car outside in the market at the same price. Otherwise, it's not apples to apples, right? At the same price, 29,70,000 that we have here, we sell it at 29,70,000 outside in the market also. So that brings us to a net outflow. You made money actually you've sold the car to BMW. Like the way to think about this is you go out there at the end of the 5th year. You have gone out there and sold the car in the market for 29,70,886. That money that you get, you give 25,94,800 out of that money to BMW, and then your monthly EMIs were anyway going. So in the process, you've actually made some money. But in the last month, but at an overall level through the year, you've lost 3,42,000. The present value of all of these values is 35,67,820. This is nothing but just an addition of all of these different present values. All of these are outflows. So then that's how it comes to 35,67,820, which is actually the highest among all three options. It is highest across the board. And so what it looks like is that you're actually better off getting a regular bank loan over a BMW 360, right? So that's one thing, but it's not as simple as that. I think there are a bunch of different things that we can change. So if we change the discounting factor, things change a little bit, right? So if we were made to make it lower and lower or higher and higher, you see how numbers are changing. So I'll share this Excel with you in comments. Please feel free to play around with this number discounting factor. And you'll get your answer. While the Excel tells one part of the story, I also want to leave you with some other reasons why the BMW buyback plan can make sense. So for example, 5 years from now, BMW loses its market share, loses its value, and it doesn't sell for 29,70,886. In that case, you're actually better off, right? Because at least here your assured value of 25,94,000 from BMW is locked. Unless you damage the car badly or you run it over 10,000 kilometers, in which case you have to pay that 25 to 30 rupees per additional kilometer, and your value is locked. So like for example, in an Audi, that makes a lot of sense because Audis lose value a lot. In the second-hand market, they lose value a lot. But in a Mercedes or in a BMW, the second-hand market is actually quite healthy and you do not lose so much value. And therefore, you might be better off with a regular bank loan if you have the affordability of paying a higher EMI through the course of these 5 years, right? So that's how this is. You have to take your own decision. This is one part of the calculation, but obviously there are qualitative aspects to it. The peace of mind of having to sell a car later is something which comes with this plan. This also helps you upgrade. So if a lot of people, actually that's why BMW does this, because most people who go after 5 years end up upgrading the car, right? And the customer life cycle value of a BMW buyback customer, I'm sure, is a lot higher for BMW than a regular loan. And that's why they are doing this, right? So that's something for you to think about. If you feel that you want to upgrade your cars every 5 years, maybe the buyback plan could make sense for you. But if you are like me or like my friend, who by the way finally went with the regular bank loan after he saw this, but it looks like if you want to keep your car for a long time, then this possibly can make sense for you, right? We can also include a scenario where in 2029 you refinance the 29,70,000, like the amount that you have to pay BMW, which is 25,94,000, and you refinance it. And then how does the opportunity cost for that money look? And it gets really complicated. But I've tried to keep it simple and given you a framework to think about present value and how you can use this as you evaluate your decision of which financing plan that you want to go with. So hope you found that useful. Tell me in the comments section below whether you agree with this, whether you disagree with this. If you are in the market for a BMW, Audi, Mercedes, tell me which one and which one do you end up buying. And if you have any experiences with the buyback plan, I'd love to hear about it. Thank you and see you in the next one. Bye-bye.